Battle Traders, this is Boris Schlossberg, and today I have an extremely unique, oh, look at that. My MetaTrader is going up and off. Let me close it up. Sorry, guys. Sorry. Let me kill this before it kills us before. Anyways, I was saying, Battle Traders, welcome to a very, very special show of the Trading Battle today. Today, we're going to do something very unique, very different. We're doing a debate on the subject of prop firms. Prop firms, of course, have become extraordinarily popular over the last 5 years. In fact, they've blown up so much that I don't think there's a retail trader out there that hasn't at least thought about the idea of possibly doing prop trading as well as trading their own account. So we're going to discuss every possible facet of the prop firm business with Austin Silver and Nick Syiek, both of whom are here to debate with me the issue: prop firms, are they really legit? Welcome, gentlemen. Good to see you.
Hey, Boris. Thanks for hosting today.
Oh, my pleasure. Nick is coming to us from the moonlight of Atlanta, and Austin is a refugee on the run today from the hurricane. So he is somewhere on the coast of Florida trying to evade the hurricane and being a good risk manager by essentially planning ahead. How you doing?
Doing good, man. Doing good. We actually got out before the evacuation order. So like you said, I feel like risk management wise, I've nailed this one. You know what I mean?
That's it. The key to good trading is to be ahead of the crowd always.
There it is.
Excellent. So gentlemen, very, very nice to have both of you at the show today. The subject, as I said, prop firms. Are they legit? We're going to go toe to toe here. First question of the hour. Best approach to passing a prop challenge. There's a million different ways, of course, that you could trade, but let's discuss that. Let's take apart that particular piece of it. I'll throw it to you first, Austin, and then we'll go with Nick. What do you think is the best approach to passing a prop challenge?
So I think the easy answer, at least for me and the guys that I'm working with, for the challenges that I've passed and how I've helped people do the same thing, it's always been taking advantage of this extension. Now, a lot of these companies are giving you an extension in days. For example, I was up 4.5% on a target of 8%. So I was just a little over halfway there. But because they gave me the extension after 30 days, I got another 28 trading days and I knocked it out of the park in no time. So I think if you use that extension to give you a simple answer, I think that is one of the major keys to getting funded, because then that time window, which is what everybody's afraid of, it opens up to you and it's wider. So now the approach being, hey, instead of me making 8% or 10% in 30 days, I actually have 60. Let's just do half of that in 30 days. And that can really, I think, motivate you, because then you can see, I don't even need to over risk myself like a lot of people do in order to pass the challenge.
Indeed. What about you, Nick? What do you think is the best approach?
So I to sort of reiterate what Austin said a little bit there, with different prop firms, of course, there's different pros and cons. I've explored a lot of them. Although I'm not a prop trader myself, I trade my own funds. I've worked with a lot of them through partnerships and things like that. And then also I just have been in the game for a while. I know a lot of the people who run and own prop firms. There's different things allocated. And Austin made a great point. If some prop firm that you're working with offers you the idea of, well, you can get extensions if you get halfway there or something like that, that definitely has to play into a part of your particular strategy, depending on the prop firm you're at. I will say I'm going to sort of dress myself up a little bit as the counterparty to prop firm trading today, just because I think we need it to spice it up in here. I know Austin's had success with his prop firm, so I want to give him the chance to he has more experience in that. Right. I will say this. I think that usually the common answer that I get from watching other people who discuss, how they passed it or their method to passing it, it usually involves taking more risk, being more aggressive, and doing something a little bit different than what they're used to. And for me, as a counterpoint to the idea of passing it, I think you have to change your strategy, which for me, I'm not really down to change my strategy. I don't want to change how much I'm risking and change my approach to try and pass a test. So maybe my biggest counterpoint to the common approach of, well, you have to risk more to get over the threshold, that wouldn't be my big thing. If I was to truly try and pass a funding program, I would want to do it the exact way that I am trading already. I'd want to basically just stay routine. But I understand that for many, they realize that is very, very hard to do on, low risk, you'd have to catch some really great runners in order to pass a test, which for me, just being truthful, I catch big runners every once in a while, but not often and predictably enough to pass a funding program every single month. And that's just me being honest. I'm not going to come out here and say, oh yeah, I make 15% a month and it'd be easy for me to pass that. I don't know what the market's going to yield for me next month. It might be negative, it might be positive, might be slight positive, might be big positive, but trying to confine it in a 30-day window is difficult. And probably I would just want to trade it the way I trade it without taking a bunch of extra risk or being irresponsible. But to Austin's credit, and I actually really like what he said, is you have to look at the specific prop firm you're working with, because if they give you bonus tries and things like that, it changes up the game entirely.
Exactly. So Austin, to that point, isn't prop trading just testing luck rather than testing skill? Because if you're saying to yourself, oh, you need to make 10% in 1 month, that's really not a matter of testing skill. As we all know, if you've traded for anything more than an hour, you understand that how variated the returns are. And therefore, you could go for several months, never even coming close to 10% if you're using proper risk metrics. So what happens basically is that you're just getting lucky on 5 consecutive trades at 2% each. There, you passed your test, but does that really set you up for success afterwards?
It's a great question. So I will challenge you a little bit in it by referring to the statistics for me that helped me pass the most recent challenge that I did. So it's broken into 2 phases. The first phase, you have to make 8% in 30 days or 60 days if you use that extension. And then the second phase is 5% in 60 days, no extension allowed there. At least that's the rules as of today for the company I'm with. So in that first phase, I had 36 trades over the course of about 5 weeks, call it 6 weeks. Okay. So 36 trades, 78% win rate, a risk reward on average of 1.36, a profit factor of 4.87. So I don't think you have to over risk at all to still be able to hit the target. You need a strategy that presents enough trades and has a high enough win rate that you can stack the wins to get to that goal without ever having to, none of my trades have 1% risk. Everything that I do is still less than 1%. But the other thing that you have to consider here is not just the strategy, so your strike rate and your win rate, but what are you trading? One of my big trades and why that profit factor is so high was on Bitcoin. If you are only trading forex pairs, you're not going to catch the kind of rips that I'm catching on Bitcoin on some of these overnight moves where I'm getting literally 13R, 14R on some of these trades that you're not going to get with a forex pair. So like Nick, who does a lot of forex trading, I can understand why he wants to stay in routine. I think there's pros and cons to that. There's pros and cons to everything. But I looked at it about 2 years ago and I said to myself, there's more pros to trying to get funded, trying to use enough statistics to not just get lucky, to actually have an edge here. And then I think it took some adjusting the entries I was trading and adjusting the assets that I was trading. And then no, it's not luck, I don't think, because it's systematic, it's mathematical.
Interesting. Your standard strategy strike rate and R ratios are what? Like, is it a 1.5 to 1 R basically?
Yep.
And you aim, let's just for argument's sake, round numbers, you aim for about 70% strike. Is that sort of like, in a perfect world, you want to do 70% strike with a 1.5 to 1 R, and obviously in real life, it all gets adjusted, right? So
sure.
Did you sort of take that strategy and then put it on a more volatile asset like crypto?
Exactly.
Where the possibility of R was higher when you were right, and you hit a couple of those good R's, and that's what gave you that 4-to-1 profit factor, which really was very impressive. I mean, that's a really impressive profit factor.
And I think too, a lot of it goes back to trade management. So some of these trades, if they will I never use set take profits, but I always have set stop losses. So most of my trades, I won't have a take profit in. If I do, it's really far away, because with some of these volatile assets, when I'm trying to get funded, I want to take advantage of those rips. Now, once you are funded with a prop firm, my risk size goes down. My trade management does adjust as well. With the funded account that I have, it's completely different, because then it's not about hitting a target. It's about preservation. You know what I'm saying?
Okay.
So I think
you're jumping the gun on that one. We'll talk about that in just 1 second, but let's just stay on this. Just one topic again. So Nick, my point is, effectively, when you're listening to Austin, is that he's saying, you can do it, but you got to step out of your comfort zone. If you've been trading Eurodollar and happily, I guess my thing is, I think especially if you're day trading, you need to really become a specialist. You know, like I am very, very comfortable understanding how the equity indices move. The other day, I sort of, we started trading. I think Fed during the FOMC. I dipped my toe into forex, which I haven't done in ages, and it was fun. We made money, but I was like, holy cow, am I like out of, just it was like speaking a foreign language. I haven't
Sure.
traded forex in so long, and it was just really weird. And I'm just thinking, the fact that really passing a prop test may force you to an asset that you're not comfortable with. What do you think about that?
Well, I think even within to Austin's credit about with Bitcoin, right? You could say, the same sort of thing, right? Bitcoin has phases where it's incredibly volatile, and the US dollar right now is incredibly volatile. I don't think that it's necessarily like super dependent on which asset you have to switch to in order to pass a prop firm, because right now, I mean, truthfully, I've had a little bit of like a good streak recently with my trading. I might actually have been able to pass a number of different examinations the last 30 days. But the month before that, I definitely would not have, right? I had
Right.
a losing month. So
Correct.
to that
But
point
that's
of,
because look, you yourself have to admit, yen has been yen has been more volatile than Bitcoin. I mean, you have to admit that today's forex is very unusual relative to how it used to be, and probably, I
yes,
mean, the very nature of the asset class means it's a relatively low volatility asset class versus something like equities, which is an
sure.
unbounded asset class, or Bitcoin, which is an unbounded. Bounded asset classes are going to be lower volatility. It's just that, yes, like, everything you touch these days, it's a 100-point run in 1 minute, so it's great. But I guess my point is that um, the aspect of prop trading that I think is problematic is that if you go back into a quiet period and you're an FX trader, it's going to be much harder for you to achieve the kind of double. And the other thing is that double challenge, not a single challenge. I think, the other thing interesting about prop trading firms that everyone needs to be aware of, there are prop trading firms that don't have any time limits, that only have a single challenge.
Yep.
And you need to understand, when you're sort of prop trading, you have to ask yourself, how many barriers are they setting up in front of me? And the more hoops they make you jump through, the less likely you're going to pass that test. But there are always little caveats to everything, right? Austin, maybe you want to talk about that. Yes, maybe some of these prop firms that have like no time limits or just single entry, they have a hard stop at 5%. Whereas some of these other firms that say, oh, you got to make 10% in a month and a 5% another month, they may have like, oh, if you draw down as 20%, we don't care, as long if you can come back, you can come back. So you have to weigh a lot of the variables of each particular prop firm offer to understand exactly where your risks. Like you have to analyze the prop firm offer the way you would analyze a trade, I think.
I totally agree. And they're all constantly changing their rules. They're all constantly in competition with each other right now, because this prop firm industry, this funding traders industry, is like just catching steam. FTMO,
Right.
that one, they've been around for so long, but now all these other companies that are coming around, it's very competitive, and that makes it really great for us. So I think,
Right.
to your point before about challenging like your mindset of like, let me see if I can take this challenge. I think a lot of people look at it like this. If I was to, let's just use easy numbers. If you get funded with 300 grand, with 300K, let's say if you can do a 5% month, that first month on your profit split, just use easy numbers again, about $10,000, $12,000. So in that frame of mind, would you spend, let's just call it $8,000 for the potential to make 12,000 and then have that funded account to keep trading? To me, I would definitely do that. So a lot of people would say, all right, I'm willing to spend a lot of money on these funding challenges and be more aggressive and be more risky than I think what me and Nick would be perceived as like good trading. But they look at it like a little bit more of a gamble to just get lucky, like you said, and then hit that funded, account.
Right.
So I think you can you're still going to have that. And those guys are the churn and burn, and they're making the prop firms rich, versus the guys like I think me and I think Nick would do great with it. Honestly, I know debating and going at each other, but I think Nick would do, like, I could see Nick trading gold and being funded and just trading. Like, I think there's a lot of edge to be exploited, but you just have to be open-minded to say, maybe I'll go do that. Maybe I'll develop you've developed a new strategy basically to trade indices like you, Boris, and crypto, and it's a volatility strategy. So it's like now we can trade it accounts and use the prop firm money. So I think it's just perspective.
So that actually brings me to the second question of
Okay.
how different of a mindset is it to trade prop money versus real money versus your own money? I think it's very, very different, but I'd love to hear from both of you guys. Nick, I mean, you said, you haven't traded prop, but you've obviously been around a lot of prop firms. You can see, you've probably seen a lot of traders trade prop.
Yes, I have a lot of friends who own prop firms. I've seen numbers. I feel like I'm familiar.
So tell me a little
ends.
bit about what you've learned about the mindset of a trader trading prop accounts versus the mindset of a trader trading his own money.
So we're leaving names out of this, but I will say I know somebody. A lot of people probably know them. High up in a particular prop firm, and they told me their strategy about similar to what Austin just talked about. Getting funded is slightly different, according to him. I'm sort of reiterating, slightly different than actually trading the firm's money. So assuming with this second question where we're talking about, is it different trading with someone else's money, which is essentially the idea. Once you're funded, you're now using or basically rented out into another person's money to trade their account. Well, the advice that I got from this individual who is one of the higher ups at a particular prop firm, he basically said that it's different once you get funded. The idea is, like Austin said, preserving the account and not losing it, right? Because that's the other half, is a lot of people will gamble. They'll launch themselves into a prop firm account. They'll get lucky. They'll pass phase one, phase two, whatever, obstacles they put up in front of them. They'll get through, and then they'll keep trading like that, and they'll blow the account, and then, they've lost it, and now they're back to square one, and hundreds and hundreds of dollars more poor. So the tactic is, at least according to this guy, is treat your official funded account as 10%. And this is one of the leaders of the prop firm's analysis side, 10% of the actual value. So if you had a $100,000 account, trade it like it's a 10K account. If you have a $300,000 account, trade it like a 30K account. So this brings me to one of my biggest, concerns. It's like, okay, if I'm hearing that from one of the higher ups there, 10%. Okay, so I paid like $800 or whatever to get a 300K account, but then the margin requirements and the drawdown limits, basically you're telling me to actually trade it like 30K account. But just to get my money back, I'm going to need to have a huge return over a year just to come out, relatively profitable. If I'm trading it as if it were 30K, my lot size is going to be really small on a large account. So for me, it comes to a point where it's like, okay, you know what? I'd rather just work my way up from small amounts of capital and do it the old fashioned way and get to the point where I'm fortunately at today where I can trade my own money.
That's really
so interesting, because I think that probably, it's just an interesting approach that he would say that to trade it like 10%. I've never actually heard that. That's very interesting, because to me, it's like, whether you do it that way, and I'm not a math wizard, so I don't know the math different, but if you just do it that way, or if I just traded less than 0.5% of my total account, if I was putting 0.1%, 0.2% risk, what's the difference if I'm doing, what I mean? It's almost the same position size, probably. It's very small. So I think but that mindset of like preserve the capital, that's definitely it. But to your question, Boris, about like, is it different to trade your own money? Of course, like you said, it's very different. But I think there's right now where we sit macroeconomically with the opportunities to buy things on the cheap, whether it's real estate or stock, there's just a lot of other opportunity to diversify your money into, and you can get risk-free basically money with these funding companies. So you can get funded with $100,000 for $500. I mean, you talk about opportunity. Come on. Like, to me, people think, oh, I'm just going to put it in an account and trade with it. No, you have to generate that and pay taxes on that income. You trade it. Let's just say you're profitable. They're going to tax again on the way it works, So here you can go and get linked up with these funding companies, scale the capital, link the trading accounts, really manage a lot of money. I'm working with a guy who's almost at $1 million. You can get to that point
because he has more than one prop account that he's passed.
Correct.
And he's trading those two accounts.
Multiple accounts. Yep.
Do you ever have anybody trade a couple of accounts, different firms, where they're offsetting positions, where they're long on one and short on the other?
No, Boris, I don't hang out with the same degenerates that you hang out with. So no, my people don't do that. Come on.
Exactly. That's what I would be doing. Wow, that's really interesting.
Yeah, so I think it's definitely different, you know, and I think right now, like I said, with where I can take my own money and I can then put it into other ideas, whether it's a bit new business idea, real estate, stocks, you know, like just even investing for taking the profit and then investing it for the long term, it just makes a lot of sense. And then also being in the States, like it's different for everybody in every country, but if you're linked up with a prop firm as a pro, then that helps you if you don't have a lot of other write-offs for your business that can help you justify more. Of course, talk to your accountant. I'm not an accountant. It can help you with taxes at the end of the year because now you're working as a private contractor, you know, so you'll file your own taxes. So it's definitely beneficial. And they pay you out in crypto. So then I can take that money and they send the payout, Boris. And
that's really not a feature these days, you know. But
why? Why do you say it's not a feature? Why do you say it's not a feature? What do
you mean? You know, like if I'm getting paid out at, you know, at Bitcoin and it drops by 50%.
So you're like, yeah, now it's costing me money. I got you. That's funny.
You know, it's like you know, you become El Salvador. You know, it's
right.
You convert your treasury. You convert yourself a treasury at 60,000 Bitcoin, only to find that at, you know, 18,000.
Right.
So the last question I want to talk to everybody about is: do the rules set the traders up to become for better habits? In other words, I you know, I have my own view on this, but I'm actually curious. Like Nick, do prop account rules actually make you a better trader or a worse trader?
So you might. So I don't want to come across. Let me sort of backstep just a little bit with this. I actually don't think that prop firms are bad. I think for the right people, they can be used great. Because most people, I'm speaking from experience, sadly, of the vast majority of comments you guys both are probably familiar of, people who are just, you know, they're throwing money into these prop firms. They don't actually have it all figured out with their trading yet. They don't even have strategies. They're just thinking, you know, hey, so-and-so talked about how much money they made through prop firms. So I think prop firms can be good. But I will say, in terms of trading habits, I think prop firms are actually great because they force a conversation onto traders that they might not otherwise have been pushed into, which is this idea of like, okay, well, let's assume that you do get the trading account. Let's assume that you do pass this prop firm and, you know, prop examination, you're into your account. How are you going to properly manage it? My opinion is that if you were to just take those same rules that they apply on you and just generically apply them to your own trading with or without a prop firm, you'd probably be better off. Like, I think that if you said like, okay, your max drawdown should not exceed 7% in your first year of trading or whatever, right? That's a great tactic to tell somebody, like to force them to think about, hey, you're going to lose your account. And basically you get forced out of it in the prop world, which is great. Doesn't allow you to even have the option. You get forced out of a trading account where you've broken the rules. And, you know, if you can kind of look at a prop firm's layout and say, hey, you know what, I generally agree with these rules, and then find your constraints, your risk management, your trading strategies, whatever, to fit those rules, and then just apply them in your general trading, prop or no prop, I think you're better off. So I would say it's actually a good thing for traders to be forced into thinking about these structures. The only thing where I think is there's a little bit of a marketing gap where I talked about previously, where, okay, higher ups are saying, you know, you got to trade tiny on a big account. Well, they're advertising a 300K account and then they're telling you actually trade at like 30.
That's what I'm saying.
It makes that $500.
That's what I'm saying, Nick. That doesn't rub me the right way. Yeah.
Yeah, you see what I mean? It's a little less attractive that way when you phrase it that way.
Right.
But the rules, I would say, are great for traders to think through.
So Austin, sorry, chime in here. You seem to be in agreement here, but what is it, the point that you were in agreement with here specifically?
I'm saying, I mean, I was going to actually take the other side to what Nick is saying in a way about, but I'm saying if the higher ups at the company are telling you get this 300K account and then treat it like it's a 30K account, that's terrible marketing. They should be fired. You know what I'm saying? Like, so that's why
that was on the down low. It was on the down low.
That's on the DL. But now it's on. You know, it's we don't know who this person is because they'd be heated. They're remaining on now. But the question about,
so what's your view on the idea of the rules?
Yeah. I mean, the rules, like Nick said, I think there's going to be buckets of people, really. Some people are going to be like what Nick said. They're going to take the rules, use them in their own account, going to help them. Some people are going to take the funding challenges, take 5, take 10 of them, be so frustrated, call trading a scam, and then make YouTube videos about why trading is a scam and why the prop funding companies are all a scam. And then there's going to be people that love it because it challenges them, pushes them. They find a new edge like me, and then they really enjoy the process that they held out from doing for a long time. So I think the rules it's another filter, and then people drop into a certain bucket. It's not a one size fits all because we all know not everybody is going to make it in trading. So if anything, I think these rules in some degree filter some of the people who will never make it. It filters them out right away.
Right.
Now, some of those people that get filtered out in there might have been able to make it if they just would have traded more conservatively and never had that pressure and blah, blah, blah. But I think majority, it's getting rid of people who will probably never be able to make it long-term in trading. And it's really helping the people who have taken the time to build a system and find an edge.
So, that's an interesting point because I was thinking about this particular subject, and I sort of agree with you, Austin. One of the interesting things about these rules, I think the rules are horrible. I think, they really teach you bad trading habits.
Most in 30 days, come on.
Right. Yeah. I mean, I think they're all just really, really horrible for real life trading habits. However, there's this one very positive thing about prop trading, which is it makes you accountable. Right. It is a process in which there is a terminal and then you're accountable. And the thing about it is it's cheap accountability. Like if it's your own account, we've all done this. You're going to blow the first 10,000. You're going to blow the second 10,000. You can blow the third 10,000 of real money. Here, you're just going to blow your feet at 800. It's a cheaper lesson to learn that you're an idiot.
Exactly. Exactly.
And as you said, those people that want to improve will then try to figure out how to change their behavior so they're not like bullying the market, as we talked about.
That's a great point.
Like the single greatest mistake that every trader makes is they try to bully the market instead of retreating back when they need to. Yeah.
Right. Exactly. Well said.
So it's in a way it's a cheap way to learn accountability. Although the rules themselves are kind of horrible. So overall, how are we feeling about this? Let's Nick, what would you say on balance? Is this somebody who's who's really, really interested in trading? Is this something that you would recommend to them as an experience?
So it's an interesting one to answer because I think like my short answer, truthfully, I've said this before, but usually when people new to trading ask me like, hey, can I pick up trading as a way to pick up an extra source of income? I tell them, no, do not expect to make any money from trading in the first couple of years. Like literally you are not.
It's an extra source of loss, my friend. That's what it is.
Yes, it's an extra source of loss. Yes. So to new people, same answer applies to prop firms, which I think we can probably all agree with. Like you need to be cautious with all of this stuff. It's very easy to jump in and lose a bunch of money. But I do kind of like what you said. I mean, I sort of agree with that idea. It's like it's a better learned lesson to lose $800 than to lose $10,000. And you hope that people would stop after they lose a prop firm, that they don't just jump into their own account and lose that too. But generally speaking, I think prop firms are not bad. I think that they can be abused just like the rest of trading. Everything in this industry is about freedom of choice. You can do what you want, and prop firms, you can do the same thing. You can try and YOLO your way through a prop firm, and maybe you get lucky. Most likely you get burned. But I think that's just trading in general, and I'm a big fan of freedom of choice when it comes to all this stuff. So do what you'd like to do. Be very careful. If you're new to trading, I would say my tip when it comes to prop firms is look at the prop firms, take their test trials, but don't test it once. Test it like 3 months. Can you do it 3 months in a row? If you can do it, hey, consider it. But don't just take 1 month because you got long gold and it went really well, and now you're like, oh, I can get funded, right? You got to be very, very cautious with acceptable returns.
And I would say it works the other way too, that if you fail once, don't quit. It's just exactly. You want to fail 3 or 4 times to kind of really get a good feel for the process. What about you, Austin? What would you say about the whole experience?
Well, I've had a really positive experience, and people around me have had positive experiences as well. There's always people out there that have a negative experience with getting funded in these prop firms. I think I was close-minded to it for a long time. I saw James, the guy, Boris, and James, Nick as well. James has been funded the longest out of all the go with, and he just pushing me because it went from like friends, and he's trying to help me out to where he's pissed that I'm not listening to him. And still, it took time for me to do it. So it's like, I think if you're open-minded and you're willing to explore new ways of making money, you might have to adapt. You might have to adjust your strategy, the rules you use, the perspective, the time of day, the assets that you're trading. All of that might have to change. But if you're really looking to scale up, I can't think of a faster way. Because like I said, if you want 100 grand in a trading account, go make your 100 grand, pay taxes on it, make it cool with your family and still pay your bills, that then you put 100 grand in a trading account and they're going to get taxed on it again. So to me, I think from the tax perspective and the hustle to get to that point, and it's still I literally, Boris, spoke to somebody yesterday, interested in our mentorship program, and he lost $100,000 just trading with no, just lost. So I think if you go at this with the perspective of I would take, and I'm willing to be open-minded, it's easy. It's
I would take Nick's point on that it's really not 100 grand. It's actually 10 grand of real money, because it's it's a 10% stop or a 5% stop. So it's not quite 100 grand. But yeah, I get the feeling. I get the idea. It is still not your money, which is a huge positive.
Well, and I think I will say
too.
Just to reiterate, you guys, I think
the
cool thing is that like a lot of a lot of what we're talking about here is we've talked mostly about like strategies around funding programs. We haven't really even gotten into the backside of it, and I don't think we have time for it today. But I do think just in general, that's another thing is you have to think about, be very careful with the marketing of these things. If they tell you, oh, you're getting 300K account, but then you look at the rules and it's really, yeah, they're giving you 30K of an account that you really truly could blow of their money, whether it's real or not. There's a whole other side to it. Is it real money behind the firm? And, there's so many different levels to this stuff. I think, like I said, it's tread very carefully for people who are interested in prop firms. Do not assume they're all the good guy, because they definitely are not. The numbers are not there to help you.
They're not there to get us. They're there to make this is capital.
Exactly.
At the end of the day, somebody said you don't need to know about everything, every piece of everything, to make money off of it. And that's how I feel about getting funded. We need a part two. Natalie and Diksha and the production team. We need a part two to talk about the process of and legitimacy of
I think that's the one part of the debate that we definitely agree on, is that we definitely need a part two, which we will certainly have sometime in the future. But in the meantime, why don't you guys let everybody know where everybody can find you? Nick, where can people find you? Easiest places, and
so you can either go to my YouTube channel, Trader Nick, or you can search up a1trading.com. We build tools for forex traders,
and it's Trader Nick.
Yes,
Trader Nick. Okay, all right, very good. So we'll go look for you there. And what about you, Austin?
Every social at Austin FX. ASFX.biz is our website. We'll be in London in December. I have a couple of seats for a seminar in London, and it's like the next big thing towards.
You know what I can't wait, the Cockney Londoner trying to understand your fast talking New York
I've been working on my accent, Boris. I'm not going to give you a preview now, but I have been working on my accent, so I'll be fine.
I'm like, mate, what are you saying, mate? It's like, that's it. No, it's awesome. Thank you, guys. It was really awesome. As we all agree, we need a part two, and we definitely will have it. But this has been a great eye-opening start to the whole concept and the discussion on prop firms, and give us some very, very good angles from both ends. Thank you again. This is Boris Schlossberg for the Trading Battle. Over and out, guys.